the OMO auctions is that it's a single bid auction. A bank can only submit one bid. So even if he aggregates all of those demand from different customers, he can submit only one bid. What I see here is a return to a monetary policy practice that we had, say, some 8 years ago. Right. Prior to this new administration coming on board, about 8 years ago, open market operation bills were open to all individuals and all investors. We just see that this central bank is trying to go back to all of those things. You also, find that they've reopened the expanded discount window. They've opened, tenured repos. They've allowed, banks to borrow from them when there is an FX, quote and unquote activity going on and all of that. So what they're just doing is they are returning to best monetary policy practices. They're restoring the market to normal, haven't achieved stability over the last few years. They're just restoring market to what it used to be, such that, we continue to progress from there.
Interesting. I would like you to sort of expatiate on this because, two more highlights from that decision. Number one, the CBN eased banks borrowing from the central bank, and then they restarted longer-term repo operations. With these, banks can now borrow through the facility on the same day they trade in the Nigerian foreign exchange market and also participate in primary auctions of government securities. I'd like you to help us unpack this.
So what the CBN is simply doing is it is restoring its mandate of being the lender of last resort. And it is also good to know that what they're doing for these banks is a temporary funding window. Now, I can state clearly that no bank as it is today requires this expanded discount window, tenured repos from the central bank, because like I said before, the average, interbank liquidity has been around 3 trillion over the last 6 months, which means banks don't need to actually borrow from the central bank. But the central bank, like I said, is restoring its mandates as a lender of last resort, and it's just going back to market practice, best market practices, where the central bank is available should you need help. However, I can say today that no bank has had the need to access that window over the long term, over the last 6 months, so even 1 year. The market has been extremely liquid, that if you have a temporary liquidity gap, you can always get that from another bank.
Right, taking it together, talk to us about the signal you're getting.
The signal from the central bank, for me, ultimately is just restoration of global best practices, and then opening the, and just positioning as, again, like I said before, the lender of last resort. Now, let's speak about, opening OMO up to every individual and everybody. Again, what they're trying to do is control money supply. They're trying to ensure that, not just the liquidity with the banks are the things they're attracting, also the liquidity in the pockets of individuals are what they're also looking to attract, so that they can control money supply and money outside the banking sector and money generally in the economy. And that's the positioning that I've seen from this central bank.
Okay, so CBN's next meeting will be September 21 to 22, all things being equal. What are your expectations?
Personally, and I think I align with many analysts, there should be sort of a small rate cut.
Rate cut?
It's not a bumper cut, but there could be a small rate cut, and I'll tell you, I'll explain why I expect something like that to happen. The impact of the US, Iran, Israel war that has been affecting energy prices, sort of the market has sort of understood that, and it's sort of like stable, right? The last time, I think 2 weeks ago, when America bombarded Iran, we saw oil prices go all the way to $100, and then very quickly it came back down to $80. But we're not seeing those spikes, again in inflation numbers. Inflation is moderating. Between now and September, it's going to moderate even further. The central bank may have the confidence to cut, but we don't expect them to hike interest rates. I think from here on now, we're looking forward to a season of cuts, but not a rate hike. Worst case scenario, best case scenario, they leave the rates unchanged, but there's a possibility of a tiny little cut.
Tiny little cut, 25 basis points?
Yes, on the back of, inflation moderating and expected to even moderate further.
Inflation moderating by 0.02 or something? Is that a moderation? Or maybe we need to check.
It's an encouraging sign for the central bank. It's an encouraging sign for the central bank. Let's wait for the August numbers to come out, and then we see We'll see if they take further confidence from that. But this central bank is a progressive one. And most of the things they've done, like I said, they're just restoring their mandate, with every move that they're making. It's one that we in the market, we really commend this central bank. They're doing all of the right things. They're taking all of the right steps. And we are seeing the results, in the exchange rates, interest rates. Things are just, moving forward.
Interesting. So are you saying that the fixed income markets might be more attractive than the equities market at this point in time? Because you sort of almost alluded to that earlier. I want you to, just respond to that.
Well, I'm sort of biased to the fixed income market,
because you play there.
Again, yeah, because I play there. And again, we're seeing a lot of interest in this space. For example, there's a bond auction today. The debt management office is offering 1.1 trillion worth of debt. And we're seeing a lot of interest already for these debt instruments. We won't be surprised if, the bids are in excess of 1.5 trillion or thereabouts. We won't be surprised to see that because we're seeing a lot of interest there. And then we also know about the situation, with the FTSE Russell classification of the Nigerian stock exchange as a frontier market. That has been, that is under review. And because of that review, we're seeing less interest in that market. And then we're seeing people stabilizing or positioning in the fixed income space. Once that classification comes out positively, we're going to see some sort of emancipation or some sort of capital allocation leave the fixed income markets to the equities markets.
And how soon do you think that's going to happen? Because we know there are engagements going on now.
Oh, any moment from now, I expect a positive feedback from FTSE Russell. I think they're going to affirm us and put us in the right classification of for frontier markets. I think that's going to happen. And so we could see, capital allocation begin to flow to that market very soon.
All right. Thank you so much, Alimi, Chief Dealer, ProvidusUnity Bank. It's always a pleasure to speak with you.